Hey everyone, Darren Morris here. I'm with the Garcia Real Estate Group in the Woodlands, and Keller Williams in the Woodlands as well. I'm here with Mark Rafail. He's my favorite insurance provider, and we decided to get together today because there's been quite a few recent questions come through about insurance and what's going on in the insurance world regarding residential real estate insurance. So welcome, Mark. Thank you for being here today.
Thank you, Darren, for having me. We don't have an automated round of applause crowd like a Jerry Springer show, but I would think that would be the part where
Yes.
maybe you could edit that in.
I'm going to add that next time. Yeah.
But thank you for having me. And I know there's an elephant in the room, and that is, probably the number one question you want to ask me, which is, why has Texas and the United States insurance premiums increased? And I just want to help give a couple reasons, because it's not that the insurance company is out to hurt anybody financially. But if you take, Darren, COVID, the Texas freeze, inflation, and new presidency, and you roll that all up, that's what you're seeing today. And unfortunately, what happened is, remember, Darren, when you bought that house, or you sold a client a house in the Woodlands for $400,000, and it was a 3,000 square foot house. It was insured at $125 a square foot. And then, every year, you renew it, and then boom, freeze happens. And there was a leak, and that leak, it was estimated to be $75,000 to repair. Well, then, because of the cost of lumber, the cost of construction, and the shortage of labor, well, what happened was that $75,000 claim turned into $150,000. Yeah. Even though you may not have felt that because you didn't have the claim, in the background, each carrier was paying out double of what they anticipated due to those costs. Yep. So lo and behold, you also have lawsuits. Next time you drive around, Darren, look at the billboards. Every other billboard is an attorney that says, we will sue your insurance company if they don't pay your claim outright, and we'll sue the other party if you got an auto accident. Hence why auto premiums have gone up.
It's so true. Yeah.
So now it's all things we don't want to hear, but it's the truth. So now what's happening? Either the insurance carriers are saying, we're going to double our rates to stay in the market or increase it, what we need to. Or B, we don't want to insure greater Houston properties or Texas in general. We're pulling out. Mm-hmm. So then what happens is it limits the carriers. And when you start to limit those carriers that are in the market, they have a minimum to take on all that risk. So we are hoping that over time, that the cost of reconstruction, the cost of labor, and the cost of insurance will flatten out. Now, Darren, there's one thing called reinsurance. Those are you ever heard Lloyd's of London? You ever hear that? Well, Lloyd's of London is like an insurance mecca. They help fund financially the backing of insurance companies. So insurance companies have insurance in case they belly up. They don't run out of money. Well, the reinsurance companies were doubling their rates. So it is a global and trickle down effect that has affected us, locally, right?
Absolutely.
Now, with that being said, it doesn't mean it's the end of the world, and we can navigate these waters. So what I'd like to do, Darren, is just tell you a little bit about our agency and then some tips on your insurance. So what I'll do now is I will screen share a PowerPoint about our agency that we have shared with other real estate professionals at HAR and consumers as just a little insurance 101.
Perfect.
So now, nobody likes that picture of Houston flooding from Harvey, but gotta show it. We do have a team of 10 professionals licensed. We've been in business nearly 15 years. My wife, the better half, is the office manager. Nancy's been with us nearly 14 years. First hire that we did on a credit card, believe it or not, still with us today. But fast forward, we're one of the top farmers insurance agencies in the company, and where our contract allows us to be an independent broker, Darren, which means we can compare different carriers. Perfect. We've been ranked #1 out of 65 offices for flood insurance and business insurance and life insurance. And And we're a proud HAR sponsor for over a decade. That's my family. You know, everybody works for a reason. This is one of them.
Yep.
We were voted Houston Chronicle's best insurance agency. So we put that in the paper, and then this billboard we put up across the street from HAR Central, next to our office in the Upper Kirby area. So, Darren, I know you are dealing with home buyers, investors, and a lot of times consumers don't know how to insure a property. So I want to high level. So if it's owner occupied, it's a homeowner's insurance policy. If you decide I want to rent out my property or a property on a long-term basis, 6 months or more generally, Darren, it's a landlord policy. Now, here's the kicker. We're all, you know, people are trying to get in the Airbnb business, and then a claim happens and the carrier finds out that you are doing Airbnb, then they can deny a claim, which is why I want to make sure that if you are doing short-term rentals, VRBO, Airbnb, make sure you tell your carrier to insure it as a short-term rental. Yes, premiums are higher because it's higher risk, but it's easier to pay the premiums than a claim that may not be covered. Builder's risk. Darren, do you ever have clients that buy a property and fix it up?
Of course.
Now, if they're going to call it renovations that are somewhat extensive, maybe room additions, maybe over 30% of the home value, that's construction. That's considered builder's risk insurance, insurance during the course of construction. And you could do it on, 3 month, 6 month, 12-month basis, depending on how extensive the renovations are. And I always encourage clients they own the builder's risk policy versus their general contractor. Reason, if you said, I got a $200,000 house, I'm going to put $100,000 into it, and the property's worth $300,000. Halfway through construction, electrical fire happens. If the contractor takes out the policy and rolls it into your bill, Darren, the check gets cut out to them. I would rather the investor take out the builder's risk policy, tell the GC not to carry it for them, because if something happens, they get the check and they can determine whether they want to use that same contractor or not.
Wow. I didn't know.
Yeah, and Darren, I know you got clients sometimes that probably list their house with you, and then they say, I got to move. I got a new job. Well, if they leave that house unoccupied for more than 30 days, it is a vacant home policy. Because believe it or not, guys, if you have your nice home listed and somebody breaks in and the carrier finds out it's been vacant for, whatever their terms are, more than 30 days, or everybody's different, then they can decline a claim.
Okay.
And then, of course, if you're in the commercial space, commercial property insurance, commercial tenant insurance, and of course, renter's insurance is important for the tenant, because if they have a claim and they are not covered, then they can't buy a house because they're trying to dig themselves out of a financial burden. Now, this is just a tip that every realtor and consumer should know. We have to insure to rebuild, and not what the sales price or appraised price is on Montgomery County district or Harris County appraisal district.
Yeah.
Okay. So that's high level 101 insurance. Now,
okay.
Darren, I know you had some questions too.
I do. I'm going to run down some questions here. So what should consumers look for in an insurance provider?
Well, I do think longevity of the carrier is important, because I just mentioned some carriers like your State Farms, your Farmers, your Allstates, once they take a certain amount of risk, they either say our rates are going to be really high for new clients, or we're going to stop writing. So then all of a sudden it forces somebody to say, we're going to create an insurance company. So there are two types of insurance companies, Darren. One is called admitted, meaning they're government backed. If State Farm Nationwide runs out of money after a hurricane, the government has an obligation to step in, fund it, make sure claims get paid. But if it's a non-admitted carrier, meaning they're not government backed, it doesn't mean it's bad, Darren. It just means that they have to have a certain financial stability to be an insurance company. And that stability is ranked. Either you're an A+ financially, an A, a B, a C. Well, okay, if you're in an area that nobody wants to insure, then maybe some of these smaller companies come in at, a fraction of the price, and they're not going to give all the bells and whistles of an admitted carrier. But hey, you can get a piece of paper that says you are insured up to this amount if it's a fire, hurricane, or what have you. So knowing the carrier, because if I said, hey, Darren, this carrier's been around 50 years, they pay their claims, for the most part responsibly. This carrier is new to the market. We haven't had enough time to really test them, but they don't have as much risk on the book, so they're willing to cut their rate, right, to get in. So what's happening, Darren, now is a lot of those carriers that came in the market are quickly leaving because they realized that they underpriced a lot of insurance.
Yeah.
So
yeah.
I think the company is important,
Yes.
along with the coverage.
Okay. So the company is, of course, important, but there's different agents inside of those companies as well. So what makes a good agent? What should you look for in an agent?
The same thing you're doing, Darren, right? Like, if you're not proactive with your clients and telling them reasons, then of course it gives them reason to talk to somebody else. So I do think the difference between the reason we do well together is we do business the same way. You got to do business with people you like, and you trust. And our staff, Monday through Friday, 9 to 5:30, if you call, somebody's going to pick up. So I do think there's a difference. There are one-man shops, two-man shops, that, they're very happy to take on new clients, but really the it comes to the metal whenever you need service. Every year at renewal, you sign me up, but you're not talking to me at renewal. That's the biggest difference, Darren. And when your rate does go up, and it's not you, it's the market, we have to come with options. Hey, Darren, yes, this carrier went up, but we shopped it with 2 or 3 different carriers. This one's comparable coverage. This coverage is not comparable, but at least you have something to compare and reasons why, versus if you're not communicated to, it really hurts, right?
I really appreciate the fact, I mean, we've worked together a long time, years and years. And I appreciate the fact that I can go to you guys and say, what kind of insurance and how much do I need? I'm not going to, I would never expect to get something more than I needed that I have to pay more for. And I don't know who I'm going to, another agent, and saying, oh yeah, you should do this and this and this. I have no idea if that's true or not. I know with you, I can trust you, like we were talking about trust. I can trust you to sign me up for exactly what I need, not anything more, but not anything less, which also gets me to my next question is insurance reviews. I've been talking to my clients, past clients, future clients, everybody I've been talking about insurance with. When's the last time you actually reviewed your insurance policy? So yes, all these policies are going up in price, but are they even the right policy for your house? And are they even the right coverage? Because like you were talking about, appraised values don't mean anything. So really, you've got to get with an agent, a realtor that can pull the comps and say, this is what your house is worth right now, and your insurance policy is worth $100,000 less. I mean, if something happened, so you're not even, you can't even rebuild your house if something happened to your house. That's what we're talking about with where this all kind of comes together, with you and I working together with my past clients, and we've done that with me too.
Yeah, absolutely, Darren. And it's a great question, because I'm telling you, when you get in the mindset of set it and forget it, especially if things are on escrow, well then that you got to think, well, when you're closing, the last thing on your mind is the details. It's what do I need to do? So actually, that next year, we hope to review properly in the beginning in our agency. However, if you didn't have that experience, at renewal time is the time to actually review if you are insured to actually rebuild. And by the way, Darren, in this market, the older your home, the harder it is to insure, because they're finding out, those roof claims, even that hailstorm that happened up north or down south, when the roofs trickle above 12 years, those are the ones that get damaged the fastest, the easiest. So the insurance carrier may say, if your home is 12 to 15 years old, then we're either going to depreciate that roof claim, we're not going to give you the full amount, or we're going to exclude all claims that are regarding the roof. So for you, Darren, I do think it's a negotiation tool come closing time. Like, hey, my client's going to have to replace this 15-year-old roof. So either you're coming off the price 10, 15 grand so we can get a new roof, or my client's going to spend probably 30, 40% higher, and it's going to really monopolize the amount of carriers that want to insure it. So keep that in mind when you're negotiating. And the other thing, Darren, when you review, our system can pull past claims.
Yes.
I think it's important because if you put an offer on a property and you see that there was a $70,000 water claim, and then it doesn't come up on the inspection, and you're like, well, what happened? Well, my Uncle Joe, he's a plumber, and he fixed it. Well, did you treat for mold? Because my buyer's not going to want to buy this if it's not treated for, mold, because I don't want anybody to get sick. And that's a whole different can of worms. So
Exactly.
report, you hear that often. It's called a claims loss underwriting report, basically. And it will pull past claims. And I think it's important.
Mark, we could talk for hours, and we've already gone way past your time. It's spring break, and thank you so much for being here with us. And how can we get in touch with you? First of all, I want to say, anybody who's listening, I know that your team would be more than happy, not just to try to get business from people, but to make sure that your house is insured correctly. And they would do a free insurance review anytime you want it. So run it by me, run it by Mark. Just get your information over there so they can start looking to see if you're actually insured correctly. And how do we do that?
Darren, I'm honored to help. And if clients like to ping you to get to me, that's an option. And if they like to visit us, here's my contact information, my office number, email, and website, and social media. And we offer an array of products, Darren. And one other thing I want to mention, guys, is if we're trying to save on cost in this market, remember your deductible, it does make a difference. So you got to imagine as a consumer, what can you self-insure and what can you not self-insure? So I'll give you an example. Oh, my insurance rate went from $2,000 to $4,000. Well, you had a 2% hurricane deductible on your $400,000 house. That means if a hurricane hits and it's $50,000, they cut you a check minus $8,000. Okay, I'll live. I got contacts. I can run with that. But if somebody says, hey, Darren, if you bump up your deductible to 5%, it's at like 20 grand. Okay. Are you comfortable with that if it saves you $1,000 a year? In this market, you got people that are saying, you know what, I will take that risk. It won't ruin my life. It will ruin my month, maybe my day, maybe, but it won't ruin my life. Whereas if it burns to the ground and you're severely underinsured or the claim's not covered, now we're ruining people's lives. And last thing I'll mention is flood insurance should be required on every property in Greater Houston because it's the #1 natural disaster and it's the #1 exclusion. And if if you were just telling me for, give or take $1,000 a year, you can insure your home for the biggest risk in Greater Houston, I would say, yes, it's a no-brainer, because otherwise you have to go to the bank for that second mortgage and pay 2 notes if they give you that second mortgage to repair your house. So if you want to insure your house for full replacement costs, don't forget about flood insurance.
I agree with that. And the weathermen are saying that 2024 could be pretty active. It might be one of the most active that we've seen in a long time with hurricane weather coming up this year. So I know you're watching that. I'm watching that. We have to have flood insurance in place, 30 days before if there's a named storm in the Gulf, you can't have a policy in place or something like that.
Well, that's good. And Darren, I want you to know this tip.
Yes.
If you take out flood insurance at any moment, you're right. They say it's 30-day waiting period to pay a claim.
That's what it is.
Unless you take out the policy the day you buy the house if there's financing or refinancing. FEMA waives the 30-day waiting period. Well, heck, tell Darren, if you walked, when you drove off the lot in that Mercedes Benz, if they were to say you are covered in 30 days, bye, you'd be like, whoa, whoa, whoa.
Oh, no.
Thing. You bought the house. We're in Houston. I'm not,
Yeah, that's scary.
It is, but at least you know now. Yeah. So great tip there.
Well, thank you, Mark, for your time, and we'll let you get back to spring breaking with your kids.
Thank you, Darren, for having me. Look forward to seeing you soon, my man.
All right. Thanks, Mark.
Cheers. Bye.
Yeah.